Good afternoon, everyone. Thank you for joining us today. We hope you're doing well and staying safe. My name is Maria Asher, and I'm part of the investments team that manages the Westwood Select strategy. Today, we wanted to discuss our outlook for the small cap stocks and the opportunities we are seeing in that space. For that, we have Leah Bennett and Bill Costello joining us on the call as well. Leah is the president of Westwood Wealth Management Houston and is the lead PM on Westwood Select strategy. Bill is a senior vice president and a senior portfolio manager for our small cap value strategy. With that, I'll hand it over to Leah. Hi, Leah.
Hi, Maria. Thank you so much. Also wanted to thank our guests for calling in to listen to this hopefully very interesting conversation. And Bill, one question I have for you, given the volatility in the market and a lot of the uncertainty that we see now, why do you think small caps are so compelling right now?
Well, thank you, Leah. Right now, I think given the uncertainty that's in the marketplace and how the issues elsewhere, I think the US is well positioned on a relative basis, and the small caps provide you with greater exposure to our domestic economy, which we do think will rebound at some point in time. With this largest GDP drop in history expected in second quarter of 20, the resulting recovery that unfolds in the coming years should provide a lot of opportunities for well-capitalized, good businesses to move higher. And that's really what we focus on at Westwood. The valuations are incredibly cheap. The small cap index, the Russell 2000 value, is trading at about 70% of its average 20-year forward next 12 months PE ratio. And compare that to the growth index, the Russell 2000 growth, which is trading at 134% for comparison. You can see that the small caps, especially on the value side, are undervalued. As this slow economic recovery unfolds and the country reopens, we think the tailwind for small businesses over the next coming years will position them very well to benefit. But one thing I would say, it's critical to evaluate the quality of the small cap companies, as many of them will unfortunately continue to struggle. There's higher debt loads in the small cap, and given that we're heading into a recession, a high number of companies that are unprofitable, not every company will make it in this environment. So it's very important to be extremely selective in what you like. The low interest rates that we have will allow strong companies in stronger financial positions to take advantage of deploying capital into new investments and create a better path forward for those companies. And those are the type of companies we tend to look for.
Thank you, Bill. Yeah, it's interesting. I think people also sometimes appreciate how entrepreneurial and innovative and nimble small cap companies are, and sometimes those models work well in environments like this where people really have to pivot depending on what's happening.
Absolutely.
You mentioned value, and certainly the strategy has a bent towards value, and value has underperformed growth. Why are you so optimistic about value returning to favor?
Well, we think it's important to look at the companies in detail, and the value companies have definitely underperformed the growth companies, but really it's been a little bit more of the traditional value that has underperformed. And you know, the deep value has been tough as the economic growth never really fully recovered. But what we do, and we invest at the intersection of quality and value, has been a strong source of alpha. And we think it's important to be at that intersection. It's not just important enough to buy cheap stocks or value stocks. They have to be at that quality intersection where we think going forward they'll outperform. But we do think there is a time in the marketplace where value will catch up with growth as it has lagged over the past few years.
And is it safe to say that you would think that quality is going to play even more of a important factor throughout the remainder of the year?
Absolutely. I mean, That's really what you have to look for. I mean, given the environment out there, the way a lot of the small caps are over leveraged and don't make money, we've had 10 years of economic growth, and if the companies, if the small cap companies haven't made money during that environment, I don't really see how they're going to in this recession. And certainly, I think a lot of them will not have the financial wherewithal to survive.
And a large percentage of the companies in the index are unprofitable. So I do think it's a great area where active management can make a difference as well. What what are some of the biggest risks that you see? So number one in the environment, and then also, do you think small caps are really priced to reflect a recessionary environment?
Sure. I think there's a couple different risks that we see out there. One of the first ones being just there's so many unknowns about the virus. We don't know when we'll be back to normal. We don't know how it'll overall affect the economy. I mean, we know we'll get back to growth. We know the growth will be probably a slow recovery. It probably won't snap back, to use the term that people have of V shapes. It's probably not going to quite look like that. One of the things we also see is the disintermediation risk because of the virus. So as consumers, to give you an example, shift towards their brands and the way that they buy the brands, that creates winners and losers. And it's important to sift through those that changing environment to determine who's going to come out on the other side and not just survive in this downturn, but get stronger and thrive on the other side when we see the recovery.
Thank you. How do you, so risk is a very important element, and we are in a very volatile period. How do you factor risk into your process?
We look at risk on many different levels. So if you think of our process as being the three-step process that we have, an idea will germinate from the analyst, it'll go through our research groups, and then it'll get to the portfolio level. Each step of that, each step along that path, we look at downside risk. The analysts do detailed financial models. They incorporate a downside forecast into every one of their models, and that's analyzed heavily at the research group level. And then at the portfolio level, we look at that risk and look at the downside in the stock versus what we think the potential upside is. And we also look at it in the context of how does adding a new name to the portfolio affect the overall composition and the risk characteristics and other characteristics within the portfolio so that we don't end up having unintended consequences down the road. Um, Also, we have an independent risk team that we meet with once a quarter, and they go over the portfolio from a different point of view, more of call it a factor risk analysis. And we sit down with them and we make sure that we understand the risks in the portfolio from their point of view and that we're comfortable with how the portfolio is positioned. And to take that to another level, even, we have a risk oversight committee that ensures alignment with the product guidelines and client restrictions at a higher level. And they're totally separate from the investment professionals. So risk is a big focus for us because at the end of the day, if we can protect on the downside and participate fairly well, at least, if not a little bit better on the upside, overall, that's a better outcome that has produced superior results over time.
Thank you so much. And some of our listeners have probably heard us talk about that risk is really embedded in our DNA and part of our culture. And I do think that makes a huge difference in environments like this. So thank you so much for sharing your thoughts, Bill, on small cap. And it's an important asset class for sure. And something that I do think it's important for clients to have some exposure to over the long run. And over the long run, it's from a risk reward perspective been certainly added alpha to overall portfolio construction. And we appreciate everybody making time to dial in and listen to our thoughts, and hope everybody has a wonderful day. Thank you.